Melody, how are you?
Hey James, how are you?
Everything is well. Thank you for coming on the
Good.
first episode, first segment. I'm not really exactly sure if I'm gonna do episodes, but either way, thank you for coming on. Ask a Lender. I remember doing this as I was walking into Target almost 2 months ago, and we talked about it. And this
Yeah.
week, thank you for participating. And the goal of this is to collaborate with lenders who I feel are very efficient in what they do as far as pre-qualifying home buyers the right way to get them on the course and the path to home ownership. In addition to following up, making sure they do their due diligence to make sure that
Yep.
buyer is completely taken care of. And you're one of the lenders that we've been talking for a while, we've met for a while. And if we can, instead of having lunch and collaborating, let's see if we can get this information to the
Yeah.
public and get us a buyer and finally work together.
Of course, that's the whole point, right? So thank you so much for considering me. I appreciate that.
Absolutely, absolutely. It's been a long time coming. Now, I
Mhm.
asked you via text before we got on the actual interview, what is a good program that's hot right now? And you said bank statements. So let's talk to the
Yeah.
people about bank statements. And one thing about bank statements that's I know is beneficial, people in my case or yours who are in
Mhm.
1099, entrepreneurs, car salesmen, people who don't get a regular W-2 or paycheck stub, and they can't show certain information, this is beneficial. So I'm gonna give you the platform and let's break it down to the people.
Awesome, awesome. Thank you so much. I love the introduction. And yes, we have been talking. And you asked me what is kind of a hot product right now, and I would say that there's a lot of people who want to buy, but because of the current market condition, not everybody can. But
Right.
those who I am seeing really kind of shine in our market right now are those who are self-employed. Like you
Okay.
said, yourself, people who are getting 1099, who not may not necessarily be able to show pay stubs, but definitely are making the income and it's coming in. And a lot of people have been doing it like that for a while. So
Okay.
the reason why I wanted to talk about the bank statement program is because two things. It allows for more of our buyers to qualify for higher loan amount or sales prices, which a lot of people, in our markets are looking for five, six, seven, $800,000
Correct.
sales prices.
Right.
And you have to declare on your taxes a hefty amount of income in order to qualify. And
And
so,
you end up owing too
yes,
if
yes.
you
And so
claim that much
that's
income.
yeah, and so I have a lot of clients who are self-employed, who have LLCs, who have all cash businesses. And so normally what I do is I set up an appointment with them and kind of we map out what we're going to do within the next year or two in order for them to qualify and buy their home.
Right.
But now with these different self-employed programs, one being the bank statement program, it really cuts that time in half. And, most of the time we're able to qualify people right, today. And so there are two options. Bank statements, we're looking at either the last 12 months or the last 24 months.
Okay.
The longer we go out, so for example, between the two, the rate will be better on 24 months versus 12 months.
Okay.
Why? Because we're showing stability of income over 2 years versus just one, right?
Got it.
And so, what we're looking at as bankers is we're looking at those deposits, and so we take the deposits in. We do a spreadsheet, kind of breaks down what each month deposits are, and
Okay.
from there, depending on the type of business that they have, we hit them with an expense ratio. So, for example, it could be 30%, it could be 40% expense, 50% expense. And kind of what I mean by that is if you deposit $10,000 a month and we have a 50% debt in the ratio, then it would only be $5,000 a month that we could use, right?
Okay.
Again, depending on the type of business, it could be 30% that we're going to hit them with.
So based on the amount, well, the first thing is on the deposits, do they look at every deposit? Meaning, with sometimes with some lenders, they'll take out Zelle or Cash App. Can you use every deposit, or does it have to be either a wire or a check deposit?
So yes, yes, and yes. So a
Okay.
lot of people who have businesses, especially self-employed, they are getting payments with Zelle or with Cash App or
Right.
with Venmo, right? So we
Right.
do count those as well. But what we don't count is transferring money from your savings to your checking,
Right. Okay.
or from another bank account to this bank account.
Right.
Those we're not gonna count transfers, but
Okay.
all cash deposits, all check deposits, all Zelles, Venmos, and cash apps that that look like they are coming from a sale of whatever product that you're selling, we do use them. And so that's a really good
Perfect.
question, because like you said, a lot of people do have those type of deposits.
That's good to know. Now, you
Yeah.
also said based on the type of business I have is how much you let me use of that deposit.
Yes.
Am I saying that correct? Meaning that
Yes.
if I do real estate and my real estate commission, I deposit that, you only let me use a portion. But if I have a marijuana store, I can
Mhm,
only use a
mhm.
portion of that. Is that how that works?
Correct. And so what the questions that we're asking, we ask for a business narrative. So, right,
Okay.
that means what kind of business are you doing? How many employees do you have? Is it a service-based company or is it a product-based? Right.
Okay.
So, like for a real estate agent, it's going to be service-based, right? Because you don't have products that you have to buy and then resell,
Right.
right? Your product is yourself, right? So
Right.
you're in service, and that's what it is that you are selling, is
Okay.
your service to your clients. And so if there are no employees or less than five, and it's more of a service type of business, then we're going to use most of that income. So maybe we're only going to hit you with a 30% expense ratio. So
So
we'll
for
use
me, how much can I
70% of
use
your income.
for real estate?
Yeah. I'm sorry.
Oh, now my apologies. I was saying I'm asking how much for in my case, if I want to buy a
Yeah.
house, how much can I
Yeah.
use for mine?
Anywhere between 60 and 70% of your deposits,
Okay, got it. Now,
which is
how
a lot
much?
more than just normal qualifying.
Oh, absolutely. Well,
Yeah.
would this be considered a non-QM loan,
Yes.
meaning outside of Fannie, Freddie, FHA?
Correct. It
Okay,
is. It
all right.
is. Yeah.
And then
And
how
so
much is it? Go ahead. I'm
down,
sorry. No, no,
down.
please.
You were going to ask how much down.
I think you're reading my mind. We're on
I
the
did.
same page.
I did. Yeah. So anywhere between 15 and 25% down. Those factors are also taking into consideration your credit, which can go all the way down to 620, which is really good. But also the property type and occupancy type. So what I mean by that is if it's a house versus, 2 or 3 units, there will be a difference in the rate and down, as well as if it's an owner occupied or non owner occupied property, that will also
Okay.
weigh on the down. One of the good things that I like about this product is that as I get more and more clients who are self-employed, and we take a look at their scenario, we can reach out to our underwriters directly and say, hey, this is the scenario we have. Can we
Right.
do it? So, for example, I had a client who they're first-time buyers. And they're young kids who, in their 20s, but they still live at home with mom and dad. And I mean, how
Right.
many right now, I don't know if it's Gen X or Gen Z or millennials do we have that are still living at home? I mean, I have a couple of myself who I'm like, well, when are you
Right.
gonna move? And my son's like, I'm not. It's expensive. I'll just save my money. And I'm like, okay, right? But
Right.
I get it. It is
I'm in the
expensive.
same boat. Trust me, I completely
Yes.
understand.
Yes. And so in those cases, most people are not charging their kids rent, or if they
Right.
are, it's like in cash and we can't really verify it. So
Right.
I had a client like that who was in the same situation, brother and sister at home, who, they are self-employed, making good money, but they're first time buyers. We cannot provide any proof that they pay rent or they have
Right.
another mortgage. And so with those other like issues, a lot of times people want 30% down. So we were able to put this guy on a bank statement program, coming in with a 15%. So it was really a big change in how much income we were able to use, how
Right.
high we could qualify them, and get them a loan. Because I think originally we were trying to do just a regular standard one, and it wouldn't work. It wouldn't
Okay.
work because it cut the income so much, right? Because his
Now,
taxes, he wrote all of the income off.
yes, because people don't want to pay that
No.
much money every month. I mean, if you make it, I was looking at a client and he was right doing his taxes so he could qualify as well.
Mhm.
And he told me, James, my accountant said if I do this much, and I think it was about 250, 260, he would
Mhm.
owe almost $80,000 in taxes. And that was with 20,000 in write-offs. That's a lot to owe the IRS.
Yeah. So what I'm telling clients in those situations is let's use that money instead and put it on a down payment and go
Absolutely.
bank statement program.
Right.
Yeah.
That makes
Yeah.
sense. Now to
But
recap, you said the minimum FICO score is 620.
correct. Yes.
Okay. And then you can go non-owner or owner.
Mm-hmm.
And let's just say over and I know you don't know the exact rate, and I understand
Mm-hmm.
that, but
Mm-hmm.
how much of a difference would it be if I only had 12 months of making really good deposits? Because let's just say for me in the real estate industry, some months are
Yeah.
really slow, but if I
Yeah.
start picking up and kicking behind, my 12 months may be great deposits opposed to 24 months because of the rates, the market, and everything else. How
Yeah.
much of a difference would my rate be?
It's about a 1/4% difference. So it's not a big difference,
That's
but
not too bad.
sometimes, sometimes depending on the client's business, uh,
Right.
it might be there. So I'm always trying to find ways to save my clients money, whether it's with the interest rate or with costs. And so sometimes if we do have that available and the income is still steady, I'll try to go 24 months. But if not, 12
Okay.
months is doable and it's not that big of a difference.
That's not bad at all. I love to
No?
hear that. Now, what I want the people to be able to do is reach out to you directly. That way, if they want more information, they can contact you. They can get pre-qualified. They can say, hey, you know what? This is my scenario. What do you think is best for me? Because even if that program doesn't work, you have other programs, and then
We
that puts
do.
them in a position to where if they don't have a realtor, I can work with them. If they do, no problem. I want to still give you the business, but let the public know your information and how to contact you to get pre-qualified.
Yeah. So, I mean, you can contact me several different ways. You'll see the logo in the top. I don't know if that's right or left hand side of your screen. Um,
Right.
those are our scan codes that will send you to our social media sites where there's a link there to an application, our phone numbers, emails. Anyway, I mean, I'm on TikTok, I'm on Instagram, Facebook, all of it,
So
everywhere.
they could DM you, message you, do whatever
Yes.
it takes to get in contact with you
Yes.
in order to get the pre-qualification going.
Yeah. One more thing I forgot to mention that I think is important,
Please, please.
is that bank statement program, they'll also have interest only options. And so
Oh, that's
because,
good.
yeah, our environment is a little bit higher rate right now, which is temporary, but that will
Right.
help the clients have a lower mortgage payment because I know
Now
that's,
that interest only, I'm glad you said
Mhm.
that too.
Yeah,
Before we go on the interest only and the other rate, is that a 30-year fix, 2-year fix, 5-year fix? What type
30.
of, oh, 30, even on the interest only?
Yes.
Okay, that's good. That is
Yeah,
really good.
it
Wow.
is. It
And
is.
this is the reason why I wanted to do this segment because I want to give people options. I don't want people just to think because they see the news or social media or talk to family members who bought a house back in 1988 that they're not in a position to purchase. If you have a will, there's always a way, and being able to have these segments and a great lender
Yeah.
like yourself and other people in the
Yeah.
industry, along with me negotiating, you
Yeah.
can put yourself in a position to buy a property and live the American dream and to build financial wealth, assets, and
You
financial
can.
stability through real estate. And thank you for this information because this
Yeah.
is great.
Of course, like you're saying. I mean, I think right now in the environment that we're at, the news is really not helping our clients. Yes,
Right.
the monthly payment is super important. You have to be able to afford it. You have to be comfortable with that payment. But, real estate is the smartest long-term investment you can make. We're making our
Absolutely.
money in appreciation. Right. So rate and your monthly payment is temporary because you can always refinance down the line when rates will come down.
That's
But
true.
that same property, like, well, I'm going to wait till next year to rates come down. Okay, so you want to save a couple $100. Same property is going to be more expensive next year because the rate is lower because there's going to be a lot more people in the market. So, competition
Absolutely.
does what? It increases prices. So you're right.
That's right.
We have to be here to educate our communities, letting them know, real estate is still the safest investment you can make. And, don't give up on your dream to own a home
100%. 100%. I agree with everything you just said and then some. Well, I appreciate you taking the time and making time for me.
because
And I appreciate
it's,
you.
what is
And
it, 45?
you're going in and out really bad. You just completely froze. Say that again, please.
I didn't say anything. I was listening to you.
Okay, okay. Because I thought I heard you talking and this went completely out, so I have to edit that part.
Yeah,
But what I was saying is, I was agreeing with what you had just said, and I was saying thank you for taking the time
of
and coming
course.
on and sharing your knowledge with the people to let them know that they have options, and that's what this is all about.
Yeah. Thank you, James. I appreciate you as well.
No, thank you. And to the next time, we'll talk to you soon.
All right. We'll see you later. Bye.
Okay, then.